Hello everyone and welcome to this live stream. So it's great to have you all here. So yeah, let's begin. So this weekend I have been working on a project. So as you can see, currently I'm sharing with you my new backtest animation tool. So this is what I've been working on for the past 3 days. And yeah, I just want to show you guys the results, and then I'm going to show you how I've coded that and how we can use it in our new GitHub repository. So we can see here it is a very simple backtester that is simulating trades on historical OHLC data. We can see the P&L chart right here, right, and the general trade statistics. Now, if I remove my camera, you can see the P&L, the number of trades, the win rates, also the historical trades. So this is what I've prepared for you guys, and yeah, so let's get into it. And before we get into the code, I just wanted to share some important updates about the channel, its updates, the content, and so on. So let's just quickly go through to this content plan. So I'm going to provide guys with general channel updates. Then yeah, I'm going to mention a new regular stream schedule that I'm going to have now. Uh, Next, and that's a very nice part, is we are actually going to have uh, a course in the future. So I'm going to offer an algorithmic training course in Python, and then I'm going to provide some updates on Discord. Then we're going to have a look at our US 100 momentum trading bot. So for those guys who are new to the channel, we have a live trading bot running currently on our VPS, and I'm just going to provide some updates on the trading results so far. Then we're going to jump into the backtesting animation tool. This is the animation tool that I've shown you just now. So we're going to look at the code, and then I'm going to show you how you can use this code yourself using our GitHub repo. So this is actually what I mentioned before. And just a quick information about the channel. So ATJ Traders is a trading community where you can trade algorithmically with us, and we're going to show you, how to write trading bots, do backtest. So if you're interested, subscribe, become a member, or join our Discord community. So you can find all information on atjtraders.com/join. And yeah, hopefully I'll get to meet you there. All right, so let's get into the general channel update. So for those of you guys who've been here with me some time, I've been streaming more or less, every week now, and I've decided to, offer you the live streams on a regular basis. I'm going to stream on Mondays, 3 p.m. GMT +2. So next Monday, if you're planning, to take some time off or, dedicate some time to join the live stream, I'd be very happy to see you there. So it's Monday, 3 p.m. GMT +2. And yeah, we're hitting 10K subscribers soon, so thank you. I've started the channel in 2021, I believe, and it's been growing steadily ever since. So thank you guys who've been with me for during this time, and hopefully we can keep growing. And with the recent live streams and the new content that I've been creating, I've decided to also provide new YouTube video content in shorts. So you can expect some of that coming soon as well, besides the current live streams that I'm hosting. So we're focused more on live trading, and then I'm going to share more of the backtests, right? And we're also going to focus more on commenting and evaluating the trading results. So this is going to be a more short format. So it's going to be, faster content for you, for those guys who don't, have a time to, attend the live streams. So I hope that with this new video format, you guys can also, look at the content as well. All right, so I think my presentation is stuck, so just give me a moment, please. Right, let's just proceed with this slide. I think I left the animation bug there. Apologies. So about the course, right? So I'm planning to release a training course by the end of the year 2024. And so the topics of that course will be basic programming Python. We're gonna have a look at data analysis and algo trading libraries such as Pandas, Plotly, and MetaTrader 5. I'm going to teach you, of course, how to backtest and how to write your own trading bots in MetaTrader 5. So great news. So those of you who are already part of, YouTube membership will receive this course for free, as this course will be hosted on a YouTube playlist for my already paying members. So this is it for a course, and now let's proceed to Discord update. So just a quick note, we've recently had a case of impersonators pretending to be me. So please make sure if someone contacts you trying to sell a course, signal services, copy trading services, whatever it is, please be aware that I would never, offer such a thing through DM, right? So this is an example of a channel member who posted this and shared this with me. So definitely watch out and be careful of these scams. So with regarding Discord, so based on that, by the end of the year, with the release of the Discord, the course, so Discord will also be only accessible to members, and this doesn't mean that you guys will no longer access. So those of you who are currently part of the Discord community can stay there and you won't be affected. So this is a thank you from my side, who have supported me to this day. And of course, I want Discord now to be a safe place, so we don't have any strangers, scammers there. So I believe that with having a more close community, other members will be more inclined to share your strategies, help each other, instead of being scared that your intellectual property might be leaked to the public. So that's also one of the reasons, and the main reason is with many requests that are coming through Discord, I will have more time to dedicate time to you guys. Okay, so this is it regarding the Discord update. So let's have a quick update about Trading Bot. So this is a historical backtest that we've performed a few weeks ago. And just a quick update about the Trading Bot. Let's just quickly go to Tickmill. And on Tickmill, this is where our Trading Bot is running, right? Actually, this is my demo account. So let's switch to my live investor account. In the beginning, we have invested 0.1 contracts on the US tech, and unfortunately, we've had 4 losses in a row. But after some testing last week, I've decided to increase the position size now, and now we are trading half contracts. So this is what it looks like on the virtual private server. So if we change our window to our virtual private server, this is where our trading bot is running, and we are now trading 5 times the volume that we've traded before. So I will update you guys on further further news about strategy, and hopefully we can actually get out of the drawdown, and hopefully we'll see some profit soon. So this strategy should actually open a next trade at 15:30, so that should be in about 20 to 21 minutes. And yeah, if we open trade in 20 minutes, we can just quickly have a look at the account and update you there. So this is it regarding the updates. So let's now actually jump back to our backtester, right? So this is our backtester. Let's first have a look at the components. So I can actually switch my camera on again. So hello guys. So this is the backtester, right? So what we have here is a chart with the OHLC charts. We see, that a trade is being generated. So for example, here at the yellow line, we've generated a buy order. And here we see, that this backtester has created a losing trade, which is marked with the red line here. Then we entered a short position here, right? And now, it's going the loss, and you can actually see the live results of the PNL on the PNL chart here, and the actual PN values of our strategy backtest. So you see the number of trades, the win rates, the open positions, and the closed trades. So by the way, you can find a code to this backtester on my GitHub repository. So just go to github/atj-hack2/atj Algo Trading edu. I'm going to add this link for you guys here, so you can check it out for yourself. So here is the link to the GitHub repository. And so basically what we will do now is we will go to our IDE, and I'm going to show you how this thing actually works. So let me just create a quick file called content plan. And in this content plan, I'm going to share the presentation with you guys. So if you want to check this presentation later, I'm just going to share this and you can check it for yourself later. So where do we find the backtester? The backtester, I've been working on it in the folder projects in backtest simulator, and in the backtest simulator you will find backtest simulator.py. So this application was written in Dash, and Dash is a Python framework for developing website applications, and it's focused on creating data analytical apps. So here we have the import for this application, and here we have a function called create app. Maybe to explain how the application works, I could maybe create a quick paint file where I'm going to explain what we have. So you guys know, who have been watching my streams, that we have our own backtester, right? So the backtester is in ATJ Trading, and we have a backtester class. And when we run backtest in our Jupyter notebook, so let me, for example, run this Bollinger Band strategy here. So what this backtester does is it is extracting historical OHLC data from MetaTrader 5, and then by specifying the strategy logic, in this case we specified, opening, closing based on Bollinger Bands, we are generating trades in the backtester that is generating P&L curve and trades. So what we do is, all we have to do to export the data is we need to take the backtest data. So here we have let me call the backtest, which I'm going to call BT data. And we will need to export this to our web application, right? So this is our web app. So we are going to combine these two projects that we worked on together. So if we check this chart here with the Bollinger backtest.py, what we can do here is, if we run this, I've created a new method, which is bt.export to JSON, right? And by exporting the data to JSON, we can use this JSON data, which contains all the historical charts, all the trades, and with that, we can plug it into our backtest simulator, and the resulting application looks something like this, what I'm showing you, right? So let me show you a quick example. So we're exporting this to JSON. So for example, what we can do is I'm going to export this file, and I'm going to call this file backtest example.json, right? So we're exporting JSON file, and here I can add a strategy name, right? Strategy name is equal to Bollinger backtest, right? If you want to check exactly, how export JSON works, what you can do is you can just quickly go to the backtester class. It's in ATJ Trading backtester, and here you see the exact method I've added. So here, export JSON actually takes the file name, the symbol indicator. So apologies. I think what we need to do is we just need to provide the file name, and we can ignore the rest for now. I actually planned to add these parameters later for a new version. So let's just stick to this, and let's run this bt export to JSON. So if we refresh this project folder here, right, we should see a new file, or let me just open in Explorer. So what you can see here is that we have a backtest example.json file. So I think I'll try to refresh it again, and now we see that the file has been generated, and this file contains OHLC data and historical trades. So what we can do to actually run the backtester, right, is I can create a file, and I will call this example backtest animation, right? And what I'm actually going to do is I'm going to take this example backtest animation. I'm going to take my backtest example.json and I'm going to add that into today's stream files so you have an easier time finding these files. So I'm going to add this. And just a quick example, you know how we run this. So let me just stop this backtest simulator, right? So I'm stopping the old simulator and I'm going to show you exactly how to use this simulator, right? So what I'm going to do is I want to import this backtest simulator from this folder. So from projects dot backtest simulator import backtest simulator dot create app. Hopefully I have that correct. So from projects backtest simulator dot backtest simulator import create app. So we need import create app, and create app is a function that will generate or create the web application required for the backtest. So now what I can do is call the app. So app is equal to create app, right? And if you look at this function, in this function we just need to specify the JSON file and the strategy name if you want to. And then I'm going to show you what number of candles and candle step does. And hopefully throughout this week I can document this app, and maybe you'll have a documentation page which will be much easier for you guys to actually understand or read through my code. So to create this app, you just need to provide the existing JSON file. So here we just use backtest example.json, right? So we have created our app, and now let's just add into a name equal main block app.run, right? So now we can run this app, and let me run this. So as you can see, the app has been created. Let me now run this app, and simply by exporting the data from backtest using the backtest class we created, we are exporting JSON file, and here we have a nice visualization of our backtest. And it's pretty nice to see, how the trades are being executed, what the P&L of, this strategy is. And over time, we're going to improve that. We're going to add some backtest analysis and so on. And also very interesting for you guys is using that, we are also going to create a live dashboard in the future, right? So this is currently just a backtester. So I'm also going to provide you with an application in the future, probably next week, where we are going to have a live dashboard with live accounts, and you are going to see the live P&L of our trading. So now it's about time, for us actually to share our trading results. I think in the next couple of weeks, it's gonna get very exciting regarding the trades. Maybe it's starting to get exciting now, right? So we've already released our first public strategy to you guys, which is the US 100 momentum bot, but more are coming, and I hope that other people might share strategies as well. Maxim Master, hello, thank you for this new algo trading. What is the spread you are using in the backtest? So for this backtest, let me see. So this is just the Bollinger backtest example. So I always specify the spread, or actually the commission in this case. The commission, I set it to $7 per 100,000 base units. So it's 7 per lot. And in the US 100 momentum bot that we have currently running, you can specify it in the backtester. So we have our trading strategy backtest here. And if I'm not mistaken, I set the commission to 2. So I remember that you were the person, who was asking about optimizing or improving the backtester to include the spread as well. So I have not done that yet. So currently I'm just backtesting using the bid prices of the candles, and I'm just including the spread commission in the commission itself. So that's currently the way I do it. All right, so this is it. Maybe if you're interested, I forgot to make a quick run through of the backtest simulator. So let's say that this backtester is too slow for us, right? Because we are updating candle by candle, and maybe we want to improve the speed, or we would want to skip, just waiting candle by candle. So what we can do is, if we go back to the example backtest animation, we can specify things like num candles, right? So currently num candles is set to 50 by default, so we have 50 candles here. So what if we want to see more candles, like 200, right? So if you want to see more candles, and we rerun this, and then we refresh this, right? Now we see that we have 200 candles that are visualized in the backtester. So you see that we have 4 or 5 losing trades here, we have 1 winning trade here, and currently we have a floating loss here. And still, if we want to create a faster backtest, we can, for example, skip candles. So we are not interested in every single update, right? But maybe we're interested in, every 10 candles. So here is a parameter called candle step, and let's say we want this backtester to update every 10 candles. So if you refresh this, and we can just restart this. So one second, my app is restarting. You see that now my backtester is not updating with every candle, but it's updating every 10 candles. And that way we are actually speeding up the process. So if you do not want to wait and just want to see quick results, this is a way you can do it. And just to clarify, what is the difference between this backtest animation tool and basically doing backtest in your Jupyter notebook, such as here, right? Because we have a Jupyter notebook, the backtest is running, we have no animation, it's much faster. So I think in the Jupyter notebook, it's better if you just want, quick results, because the backtesting is much faster, it's more reliable, it's customizable because you can define the strategy parameters here and very fast. But if you want to share a strategy, or you want to, have a look at it in a, nicer way, if you want to see how the strategy performs candle by candle, and, have a feeling for a strategy, how it works, I think this is a very big advantage to using this. And especially with you guys watching the stream, I think it's much easier for me to explain strategy than actually showing you just the notebook and the historical results, right? So one more thing, the backtester is actually able to also specify something like indicators, right? So what if you want to add a simple moving average or Bollinger Bands? So if we go back to our backtest here, Bollinger Backtest.py, I can actually include indicators as well. So here we have a OHLC dataset, and what I can do is I can provide indicators such as upper band and lower band, which I've exported in this backtest. And so if we go down to this last line where I'm exporting the data to JSON, I can tell the export to include indicators. So indicators is equal to upper band and lower band. So let me run this again. And so I'm going to refresh the files. Next, what we're going to do is we're just going to replace the JSON file, because now we have new data including the indicators. So we overwrite that. Here you see that in the JSON file we specified, that we want to have indicators visualized on our platform. And so if we now run this application again, and this JSON file contains, the data we want to include indicators, and refresh this, now you see that just by adding, the indicator values into the export, we can visualize the indicators here. And I haven't included a stop in the web application, so I'm going to do that. So I'm just going to stop it from the script. So if we just scroll closer, right? So here we see exactly how the Bollinger Band strategy works. So here we see a break above the Bollinger Band, and for us this is a short signal, so this means that we should sell. And our exit signal is when the candle closes below the lower band, right? So exactly when this candle opens below the lower band, we are exiting that position. So here this is very nice to see, and I'm going to resume the strategy now, right? So I assume that if I restart this, the strategy should be running again, which is great. So I think I've shown you a very easy example how to create your own backtest. So maybe just a quick words about how I coded this strategy. So here, as you can see, I'm reading the JSON file. Then I am extracting the historical OHLC data. Then I'm also reading the historical trades that were generated. And here there are some functions to calculate the profit. And here, this part here is the HTML component where I'm, setting the layout of this application. Right, so I don't want to go too much into detail. Here we have some update components. So here I specify that every second or a certain amount of interval, we are updating that, right? We are generating new candles, new PNLs, number of trades. We always check for open trades and the current PNL status. So I'm checking all of that. And with every update, I'm returning the values. And this app is basically working with that. Alpha Profit, love to see you using VWAP instead of Bollinger Band. Well, sure, we could do that. So I'm just going to write it down, and then we can, when we have time, create a VWAP strategy. So maybe Alpha Profit, maybe you could go on, somewhere online and provide me, with a quick description how the VWAP strategy should work, and then yeah, I could, try to think of designing a simple strategy based on VWAP, because personally I haven't tried VWAP myself, but I assume it shouldn't be too difficult. But I'm open to suggestions, of course, right? All right, so I think the last thing I would do today is maybe I would walk you through this, the step how to, go from a backtest to this dashboard again. So what I'm going to do is I'm going to create a backtest template, and maybe I'm going to look up the VWAP indicator, right? I'm not sure exactly how it looks. And the VWAP is basically volume weighted average price, some high low. Oh, so you know what, Alpha Profit? How about, I think I finished most of the things I want to say on the stream anyway. So I just wanted, to maybe design an example strategy. And because you just asked, I think I could just code the VWAP strategy right now. And hopefully you can navigate me if I'm doing anything wrong, right? So I'm just reading online on Investopedia what the volume weighted average represents, right? And so if we check here, and I can share my screen here. So on Investopedia, what they're saying is that the volume weighted average price is calculated using typical price times volume. Oh, like total shares traded. Right, okay. So does that mean that I have to maybe apply the open price and multiply it by the volume? I think that's what you mean. Right, so I think I have a rough idea. And I believe that the MetaTrader 5 data is not very reliable in regards to volume, because if you check MT5, right, they do specify the volumes, but it is the tick volume indicator, right? So here we have tick volume, and here are the volumes. And most MT5 brokers, because they're OTC, brokers, they don't provide the volume. But let's try to create a strategy that is using the tick volume, so number of tick updates within the candle. So what I'm going to do is I'm going to copy a template for for a backtester. So I think I have a backtest template here, and here's also a sample backtest. So I'm going to copy the sample backtest, and I'm going to add that into the stream. And I'm going to call that VWAP sample or VWAP backtest. Right? So let's say we want to trade on the Euro USD. So we will trade on Euro USD. Here I need to specify ATJ Trading. Import it from the correct package, .backtester. All right, so we're going to test a strategy that is trading on the H1 chart since 2023, and we're going to export the data for now. So all I need actually is, let's just delete everything. Let's just export the data and see what we get. All right, so I'm importing that, and I'm also starting that. Something that I noticed, okay, moon travel, something I noticed when price reaching VWAP SD2 or -2. Okay, I tried code SD deviation on MT5 myself, but failed. Okay, I think we can include that too. So actually, I just imported a wrong template. So in that case, sorry guys, I'm just going to go to my previous stream, and I'm going to add new backtest template. Right, I'm going to add it here too, so I don't have to look for it in the future. I'm going to add it into backtester here for future reference. And here I'm going to delete this file and create a new backtest here with you guys. So VWAP backtest. Okay, so it's Euro USD. It's Euro USD 2003. We're exporting, let's say D1. This is fine. And let's just export our historical data here. It's the same as the Bollinger Band, but it's using the volume in the calculation that's better. Then you calculate standard deviation of the VWAP and then maybe add. Right. Okay, we don't have the SM indicator here. So I just need to confirm the volume weighted average price, and the calculation formula is cumulative typical price times volume divided by cumulative volume. So I might make a mistake here, guys, right? But here I have, it's again from Investopedia, right? So maybe you can check this out with me. It's actually right over here. So I'm just going to assume that this is the correct formula. I'm going to try to apply it, and then if there are any mistakes or optimizations, just let me know, guys. So I assume that instead of closing prices, we are actually calculating the VWAP prices, and based on that, we would then use the Bollinger Band or whatever. So, so let's see. So I'm just going to, so now we have the open, high, low, close. And what they say is I'm going to write the formula down here. So we're going to add a new cell. So VWAP is equal to cumulative typical price times volume, and then we divide that with cumulative volume. So what that means is we might need to include the volume data. And again, as I said, this is not the actual volume, but we're going to use the tick volume. And so for that reason, we need to maybe include the OHLC volume data. And to do that, I will actually need to, when we go to exporter, I actually need to modify the OHLC dataset. And because the OHLC data is saved, but I'm dropping the data. So I have a function here that exports OHLC history, right? And here, I'm going to add additional columns, right? Is equal to empty list. And I'm going to include additional columns here. So I will return the OHLC data frame with added columns. So in this case, I would include the volume. So hopefully that works. And so here, if we now specify additional columns is equal to volume, maybe I'll get the volume data. So if you have a reliable data source, guys, yeah, I think you should use that. And I think that would help you a lot with basically, getting reliable volume data, because I assume that on MT5 I will not get, what you actually need. Okay, maybe it's called tick volume. Yes, it's called tick volume actually. So as you can see, we have the tick volume. Oh, but it is not rolling calculation, but reset beginning of the day. Yeah, rolling sucks. I prefer weekly restart. The big boys are there. Okay, great. So let's write down all the strategy ideas. So you guys are coming with great ideas. So I'm just going to write down, so to do, no rolling, start of the beginning of the day or the week. So I'm going to show you no rolling, start calculation at the beginning of each day. So we're going to do that. Right. And where did we leave? Yeah, and also we need to define typical price and cumulative price. Again, I'm taking that from Investopedia. So typical price is equal to high plus low plus closing divided by 3. I assume you divide all these 3 by 3. So this is a typical price, and cumulative is total trades since the trading session opened. So let's assume it starts since the start of the day. So cumulative volume starts with the start of the day. All right. So I think we have a lot of things, but I think I have a lot of time. So let's try to get to it. And at the end of the day, right, so after that is done, we're going to create a Bollinger Band strategy, right? So let's do a Bollinger Band with 1.5 STD or something, so we can, you guys can choose. So Bollinger Bands using VWAP STD. Great. So let's start with calculating the typical price, right? So this is the first thing that we have to do. Typical price, we're actually define, calculate typical price. Let's create a function. And we're going to add X, which represents a row in our pandas data frame. And I think, so it's actually easy, right? This thing is easy. So we just take the high, right, plus X low, plus X close, and then you divide by 3. And we return the value. So this is the typical price, right? And the VWAP is the typical price times volume divided by cumulative volume. So again, I'm using the tick volumes that I have here. So let's try to use that. And so basically, oh, because we're using an intraday strategy, right? Let's actually try to use like M15 chart, right? And try to work a bit with the lower time frames. So let's export data since July and work on M15 time frame. Okay, so we return high plus low plus close divided by 3. And now we need the volume and cumulative volume. So the volume we already have. So we take the OHLC dataset. We create a column called typical price. And that is equal to OHLC. And we apply this function here. And then we specify access to 1, which applies the function horizontally. So now we run this. we see that we now have compute typical price. I hope that is correct. And now we need to compute the cumulative volume for each trading session. So I'm thinking of an efficient way to do it. I think I have a rough idea. I think we could maybe use expanding based on the date. Or actually, I think I have a proposal. We could do that. So I'm going to create cumulative volume total. Yeah, group by session. Yeah, group by date and cumulative sum. I can try that. So first I need to calculate the date for each candle. So here I'm going to include OHLC date is equal to OHLC time dt.date. Okay, so now we have our date column. So I'm not sure if it works, but I'm gonna try. So cumulative volume for each session should be OHLC dot group by date tick volume cumulative sum. So I'm very curious. I believe. So cumulative volume for its date is this. Actually, let me just reorder the columns. Thank you, Alpha Profit. Split the group by idea. So here we have tick volume. Now we're adding, and then here this is a new day starting, right? And we're starting at 2:30. So actually, great. So the group by idea seems to work. And just to make sure, I'm going to visualize the cumulative volume using Plotly. So I'm going to use px.line, and I'm going to plot the cumulative volume. X is equal to time, and y is equal to cumulative volume. And let's import Plotly. All right, so we see that it actually resets at the start of every session. So this is great. And now we have, where is it? So we have the cumulative typical price that is done. We have the volume, we have the cumulative volume. So we can actually calculate the VWAP. So yeah, let's do that. So the last part here is, okay, I don't need this anymore. All right, I'm just gonna leave it here if you guys want to check it out later. So in our next cell, VWAP is equal to, so what is the formula? Typical price times cumulative times the current volume, so the current tick volume, and then we divide that by the cumulative volume. So I guess this is it. And now if we want to, let's just put it in order here. So I think we can just actually do this. Let me clean up everything a bit. So we're displaying fig in the cell. And we have the VWAP. So Actually, let's also see what the VWAP looks like. Why don't you use AI to help coding at a higher pace? Actually, I don't know. I've never tried it, and I feel like I'm not limited by that. But if you have any suggestions how it could help, then I'm not sure. Asking the AI sometimes requires more work because you have to ask the right questions. But I'm always able to represent the code, by thinking a bit about it. So yeah, thanks for comment, Alpha Profit. But I'm open to that, right? So if you show me any blog post, any solution, anything that you use, then I'm open to trying that out. Okay, so I'm not sure if this is the correct VWAP, so you guys would have to let me know. Maybe I made a mistake in the calculation because, oh, it's the cumulative volume. It's the high price plus low price divided plus closing price. Total trade since the last trading session opened. So yeah, I think based on the formula, this does make this could make sense, but I'm not very sure, guys. Well, all right. So I guess any help here, guys? Maybe you guys know if I computed VWAP correctly. I just applied the formula I saw online, and then this is basically resulting chart. So if we look at this formula here, right? So it's again, it's typical price. Oh, sorry, it's cumulative typical price. Oh my God, now it makes sense. So I should use the cumulative typical price. So that is actually my mistake. So I did not copy the formula correctly. So the formula is, yeah, cumulative typical price. So I use cumulative typical price is equal to the typical price. And I think we also have to use the group by CumSum because we are doing the cumulative for that date, right? So in that case, I'm just going to copy this, and instead of tick volume, I'm just going to implement this typical price. And then to compute the VWAP, I think this should be correct. Looks much better. So this is the volume weighted average price. Okay, let me verify that. Okay. You can find a view on TradingView to compare it. Plot it with the candles if possible. Okay. We can plot with candles. I add the close. Okay, the close price is because it's Euro USD. Let me actually check on TradingView. Oh, right. I actually checked an article in Medium. I just copied the code here. Maybe it should be this one. So this is what I copied from the internet. So here we have data high plus data low plus data close divided by 3 times the volume dot come sum. And then we divide it by the actual volume dot come sum. So, all right, so let me try to do it again using this formula, and maybe that could work. Because this is a cumulative one, right? And this is also cumulative one. So this one could probably be the same. But then what it would do is if you multiply by this and then divide by this, this would cancel out, and then you would just get this, unless you first do this together. Now let's just try. There's nothing we can lose. So apologies, but at least I'm learning something, right? Because today I've never worked with a VWAP indicator, so maybe I'm learning something new. All right, so this article on the online doesn't help. Maybe it's also possible that the data that's being displayed I'm working with is wrong. Actually, guys, we can just maybe go through this article together. I will also check TradingView, and let's see if that helps us. So credits to Financial Python. If you guys want to check this article for yourself, just visit that. And so let's see. So in this article, they're exporting the historical data. And here's the calculation. So the VWAP is taking the high prices plus low prices plus the close prices. They're dividing that by 3. Oh, my bad, guys. They're using the cumulative sum of the result here. So that was stupid of me again. So instead of doing this, I should do it like this. But I have to do it based on the... I'm going to call this the product, because A times B is equal to product. Or price times volume, PXV. And then what we're going to do is we're going to take this and doing the cumulative thing. So right. So the product, let's just say we take OHLC cumulative typical price times the cumulative volume. And so we have this value here, and this value we need to accumulate by the date. So this is just price, price times volume. And then the cumulative thing is basically taking this value, accumulating that, and then we would just have to probably do it like this. Divide that, and I think this is done. Hopefully, we're a step closer. Oh, and okay, I think I'm getting close. I just need to check exactly what I'm missing. So let me check the article one more time. Oh, and it's a count times cumulative volume, it's just the tick volume. All right, so apologies for confusion, guys. Hopefully we're getting closer. So this is just the typical price, right? So we're taking the typical price times the tick volume. This is the product of this, and then we're accumulating that, and then we should close. And I think, yeah, I think alpha profit for a function. Yeah, so I was a bit confused, with the columns, so apologies for that. But I see that finally we have the VWAP calculated compared, to the close prices. And now let's just do the Bollinger Band. So I think the rest for me is easy because Bollinger Bands are nothing difficult. So let's calculate the standard deviation, upper band and lower band. So I don't know what values you have tested with, but let's just say let's call it VSMA for and let's just say I'm going to compute the period 20, right? You guys can adjust that based on you or based on your own experience. What's the best parameter? But here, let's say we just use this. So HLC, we take the VWAP prices, we use rolling, and we calculate the average. And here I'm going to calculate the VSTD, right? So the standard deviation for that is the VWAP, and we take the standard deviation. Let's say for strategy, let's do 1.5 standard deviations for our Bollinger Band strategy. And now let's compute the upper band, right? So the upper band is equal to our average plus number of standard deviations times of the standard deviations. And the lower band is this one. Okay. So I don't think this be anything. I'm pretty confident this should work. So here, let's create another figure, or let's just plot it immediately. So px dot line. So let's take this OHS data set. X is equal to time, and y is equal to upper band, lower band. Let's add the VWAP price, and let's also compare it with the close price, see what we get. Amazing. All right, so we have everything we need here. So now what we need to do is compute. Okay, let's ignore close prices, and let's just have a 1 second. Oh, I have to deduct here. Okay, so this is the VWAP, right? Let's look at that. It looks very smoother, right? So guys, I see that when you take the VWAP, that the prices look very, very smooth. And so yeah, it doesn't spike that much because we're taking closing prices. So whenever the VWAP is above, we sell, and it's below, let's buy. Let's try that. And I wonder if we want to maybe increase the period or decrease it. Let's see what happens if we take a higher period moving average. I'm just curious what it looks like so I can get a feel for it. And yeah, let's check. So this is right. So this is what it looks like here. I guess it works. Great. So let's create a signal function. So I already have that here actually. So for a signal, if so we're not using closing prices, we're using the VWAP prices. So if our VWAP is above our upper band, right? Let's just sell. And if our VWAP is below the lower band, yeah, let's buy. So this is our signal function. And I think I'll just set the take profit and stop loss to 2 standard deviations, and hopefully we get some results here. So yeah, let's trade one lot. So you will buy, sell, everything's great. So for exit signal, I don't need any exit signal because I'm going to use take profit and stop loss for this example. So let me just comment that out. And here take profit is equal to, oh, and of course here's a problem that we are using the open prices here, right? But what we should use is the close prices, because you know the VWAP is using the close prices for a calculation. And so what I can do is I can use the previous closed VWAP, right? So in this case, VWAP is equal to VWAP.shift1, and this is assuming, you know, that we're using the closing prices from the previous one. So there is no error in the backtest, because of course we can't like know that the candle is closed until it's closed. So this is I just shifted the value. I can run this, and let's get back to take profit. So take profit is our open price plus let's say 2 times our standard deviation. So I think I call it VSTD. And our stop loss is our open price minus the standard deviations. And let's try this here. And because this is a sell position, we just need to reverse that. This is our stop loss. So let's run this. And let's run the backtester. And I'm very curious. So now we see that we have, oh yeah, we have generated some trades. Seems like some of them are profits, some of them are in loss. Let's look at the P&L chart. Okay, at least we're in profit. That's at least nice to see. So this is interesting. So this is the P&L curve of that strategy. It also accounts for commissions, which is $7 per lot. And here we are visualizing the backtest. So here what we need is the VWAP, we need the upper band, and we need the lower band. And I'm also going to, I think that's good enough. Great, so this is what we have. So the blue one is the VWAP. We see that there is a very strong jump. Oh, because it's the start of the session. Well, this is just for testing purposes. MA, you're asking how long is the backtest for? I started the backtest since 2024. Right now, I just want to finish a strategy, and then we can look for some, you know, longer time periods for the backtest, or potentially some optimizations. So this is it. So I feel like, you know, because we're shifting sessions, right? And now there's like a big jump in the cumulative volume. We see this. So maybe what we could do is maybe ignore the start, change the band factor to 2.5, 2.73. Sure, I can do it right now. Let's do 2.5 then. I think I specified that down here. Or I'm going to use it 2.5. Well, unfortunate, it's actually not working. You know what? I'm actually let's actually do a long backtest since the year 2023. Maybe we'll have more data here. Let's run this. Okay, now the trades are being generated. Oh, this is actually annoying. This is running all the time. Sorry about that. Okay. Yeah, so this is interesting. Maybe I could try to reverse that and filter for the first day and second. No trade for those. Okay, I can filter that too. But I assume that would be just these two. When you're using the data, do you use Sunday's price or ignore it? Well, there is no price on Sunday, so there's nothing to ignore. So they're automatic disregarded. And filter for the first day and second, no trade for those. I mean, if you just filter that, right, we can just disregard it. So if you start the backtest from March 23, I guess that's what you mean. Oh, right, Sunday. That depends on the time zone, of course, right? So EURUSD actually opens at 11 11 GMT plus 2. So this would include the Sunday prices. You're right. So if you want to include Sunday as Monday, what we should actually do is we should switch the platform to GMT plus 3, and therefore we would have no Sunday prices. I think that's a good comment actually. Yeah, so it depends on time zone. So if you want to keep it from midnight to midnight on Forex, we would need to consider it as GMT plus 3 from midnight to midnight. And yeah, that can be adjusted. So in that case, I would actually include Sunday prices if I had to, perform this backtest. But you know what I could try? I could actually try to do the opposite. How about we just buy and we sell? Hopefully we're not just being on commissions. Are you working with Solana blockchains? No, I'm not touching crypto. I'm not that much into crypto actually. Okay, so I guess this strategy is on the lower time frames that perform very well. The commissions are too high, so I tried to reverse that. Maybe what we could do is maybe just now run D1 backtest since 2020. Maybe that could work. And I think now we're coming to a point where this strategy has been designed. Now we're looking for optimizations. So before I end the stream, what I can now actually do is I can show you one more time how to export the data and run that in our new backtesting animation tool that we've created. So far, what's your overall goal and vision with coding and trading algos and stuff? Do you have a main thing or you're looking right? So my goal with trading bots and maybe I can now open a topic, of my risk management and what I'm planning to do, right? So as part of this Algo Trading projects, I'm planning to develop trading bots with you guys. And I'm more, in the past, I've tried to find like very, very good backtests, like, 10, 20 years worth of backtest and having a smooth profit curve. And, over time it got frustrating because the more perfection you're looking for in those trading bots, the harder it is actually to trade them live. And so what I decided now is I'm actually now design trading bots that will trade, for that have performance for the past 2 to 3 years maximum. And I'm planning like to release a huge quantity of those bots and hoping that I get an edge by looking for a lot of mediocre bots, right? Because the better they are, the higher the chance that they're overfitted. And yeah, so this is my strategy. And when it comes to risk and money management, uh, I'm not like looking for a certain amount of profit or loss. I'm more looking into like the volatility of the portfolio and the general expectancy. So, for example, within a year, right? So when I allocate money to a portfolio trading bot, I look for 20 to 30% yearly volatility on that thing. So this does not include like floating loss or drawdowns, but basically, yeah, that's my current target on that trading bot. And it all comes down to risk management, right? So if you just look at the risk, at the drawdowns and divide by the profits, I think this is the metric that I go by. So I think this topic overall is, you know, uh, you can talk about it entire day. So I think in my next stream, maybe we could open a risk management topic, right? Evaluate the historical trades. What is a factor in deciding when to turn live? And and when you have a live bot, how do you know that they're performing well or they're not performing well? And when is the right time to switch them off? I think these are very good questions that you should ask yourself. Nice. Do you think it can be achieved in a year? Like 20% per month, like 5K per month, a really good trading bot. I don't think consistently 20% per month is, achievable, right? And that's due to, my experience with coding trading bots and all those trading bots that showed some form of good performance, right? You cannot make 20% per month without risking at least the equal amount, right? You have to think like that. So if you're looking for 100% gain per year, you should, expect very, very huge drawdowns, assuming that the strategy is actually, most strategies are not as good as people believe they are. And when you look at the backtest and historical performance, when you go for 20% per month, you will actually incur huge risks. And if that's what you're willing to accept, that's good for you. Um, so if the strategy makes, in my opinion, 20 to 30% per year, right? I think that is already a very good performance. And this is actually the metric that I'm looking for, right? But of course, if you, for example, have a full-time job, right, you can invest $1,000 every month and you're willing to lose that all within a month just for the sake, of having high risk, you can do that, but I do not recommend it because, yeah, the risk is simply too high if you're aiming for 20% per month. But if you're looking in absolute amounts, right? So let's say like 5K per month for a trading bot. So let's say you have a trading bot that makes you 20% in a year, right? And there's no guarantee that it will make 20% a year. Consistency in trading bots, in my opinion, should be measured in a span of 3 to 5 years potentially. And in my opinion, when I use trading bots, right, I never think to myself that I have a guarantee that this trading bot will be profitable this year. Of course, I hope. I do everything I can to make it profitable, but the result at the end of the year is not in my control. I can only check the results, the backtest, optimize that. But yeah, so if I get 20-30% per year, I'm happy with that results. So back to your question, if you want to make 5K per month and your trading bot makes 20% per year, so let's just take a quick calculator. 5,000, right, US dollars times 12, right, is you need to make 60,000 in a year. And if you want to make 20% of trading bot on average, which is already difficult on its own, so you multiply that times 5. So you need a capital of 300,000 US dollars. So I don't, want to spoil that, right? Because that's very sad news because most people don't have 300,000. But I think working yourself up to that, right, is what you should be looking for. So I suggest first have a trading bot, see how it works, see if it's profitable, and over time, if the trading bot is profitable, right, and is consistent, you can always add more. But the expectation making 5K per month can be very difficult for some people without accepting sufficient risk. Okay, so yeah, thanks for your questions. And so I ran a backtest on the D1 timeframe. So what we see here is that we now have, actually profitable curve. We have less trades, so the consistency is a bit lower, but it's nice to have that here. So if you look at USD, this is the historical, trades that were opened using the VWAP indicator. And let's export it, right? Let's just export the data. So we export it to JSON, and let's call VWAP backtest.json. And here, indicators, I'm just going to use the upper band and the lower band. So I'm going to run this. I will refresh this, and let's go to our animation backtester. So I'm maybe do 100 candles with candle step 1 at a time, and here the JSON file. Hopefully the file is ready now. Sometimes it takes a bit of time to appear. Maybe let's just open Explorer. Here's the VWAP backtest, right? So it's VWAP backtest. Oh, now it's there. VWAP backtest.json. So let's run this. So now this is running. Here, this is our application, right? I think I might have a bug there because it's not running yet. And what does it say? Well, at least we found some bugs. So cannot access local variable and text where it is associated with value. So let's just quickly go to my backtester, actually the projects. All right, so the annotation text here is not specified, and I guess that's because yeah, I should set this value maybe to none, right? Just in case, or just empty string, just in case. And here we have our type volume. So maybe let's try again. All right. So now it seems it's working. Let me refresh this page. And here we have it, right? So these are our bands using the VWAP indicator, right? So now we're in a buy position. This backtest is going quite well. So now we're in a profit. We've opened 2 trades so far. And yeah, everything's great. So here we open another buy position. As you can see, we have the stop losses here, right? So this is the stop loss. This is the take profit here. Actually, I could improve the backtester a bit. Yeah, I wanted to add SL and TP and the annotation text. Oh, I see the problem here. Here's the annotation text. This one should be the stop loss, and this one should be the take profit, right? So I did a very quick fix. So I can't see it yet. I'll fix it later. This is a minor thing, but yeah. So that's great, right? I'll clean up the charts a little bit, and yeah. So thank you everyone who asked regarding the VWAP indicator. So at least I learned something new, and we were struggling a bit, but with your help, we were able to calculate that. And so I think we're getting to the end of today's stream. So maybe I'll give you guys a last update, what I'm planning to do next. So reminder, we're going to, or let me just open, my presentation here. So we're going to stream every Monday, like at this time, 3 p.m. GMT +2. So I hope to see you guys there next week. In the meantime, I'm going to put out some video content, some shorts. We're also going to deploy some strategies live. So I'm going to update on that when we have live strategies. And if anything, just come to my Discord. Discord is still open, right? So I'm not planning to take it private until the end of this year, and I'll be working the course, as I said. And basically, yeah, this is my plan. So thank you guys for coming to the stream. Sorry, Mo. Nice to see you here. Unfortunately, you came late, but yeah, check the recording, and hopefully you'll be able to arrive next week, 3 p.m. So I provide some updates, and I know that you've been coming to my streams very often, so I appreciate that a lot. And yeah, so yeah, it was a lot of fun, guys, coding with you guys. So have a good day, and see you later. Bye. Yeah, one last question. Are you also a full-time trader, coder? Yes, I trade and I code. I'm doing that full-time. And I'm also trying, to build a trading community. Trading can be a lonely job. So yeah, glad to have you guys here.